So we are at an interesting spot in the S&P here. I think that the failure to hold above the 2504 zone here, um, for me that was the most important thing. Um, Obviously, after the news shakes out and on-farm payrolls a bit, we stabilize and hold the level, attempt to go higher. Um, but just not seeing the and trust me, this is a little bit of hindsight analysis here because I don't know, to be honest, I traded terribly during that sequence this morning from just non-farm payrolls through, you know, a little bit after the open. Um, but with the clarity of hindsight here and what we could really see was going on was a hold above a level, but we saw order flow not agreeing. And then we saw very, very strong absorption. Finally, it's like the buyers finally decided, hey, we better be getting long here. And a passive seller was 5 steps ahead of them and said, give me all you got because we're making the high here. And from there, it was a breakdown. And then it could be tough to get into, right? Like I know that this was a little retest back into ETH VWAP. For the pit session, we're starting to get in a downtrend. And so this was probably one of the easier trades with the little up thrust pattern there, almost back into VWAP, and then clearly, again, downtrend RTH. And that brought us into this little guy. Well, the two zones, right? So we've got a bull zone here with a neutral reference just beside it. A lot of times, if we're going to go neutral reference and then we have a shift based on that, this is what we kind of call stacked references. A lot of times, one, it'll go to the further of the two, and two, it will, what should I call it? Go to the matching type of line that I have here. So if it's holding a dotted line, a lot of times it's going to go to the other dotted line. Not always, but it's a good rule of thumb. So anyways, a little bit of micro bearishness for students here. Obviously, the order flow shifted again here into the bottom. In fact, we did have an absorption into these lows right here, which kind of ultimately did nothing but cause a just kind of that next pullback opportunity. And then we went towards these destinations. Now, with this break below 62, break below mid 70s, things are bearish. I think that market internals are bearish. I think we are potentially seeing a trend day here. So far, it's an inside day, right? Have we reached so far it's an inside day. Obviously, we, failed to get above yesterday's highs, so it's not technically an inside day, but for all intensive purposes, we just wicked yesterday's high and we haven't taken out yesterday's low. We're trading 99% within the prior day's range. So, some of these things that we're seeing in markets are conducive for a downtrend day here. So we've got the all clear now, to be honest. So any kind of pullbacks back up into mid 60s to 70, I think is great short opportunity. I guess I could talk a little bit about my underperformance today. Always happy to share the negative lessons, if you will. A lot of times I'm doing a lot of chest beating. Look at the good things I did and stuff like that. So I think it's great when I can share the tougher times, the negative stuff as well. Plain and simple. I continued to flip-flop this morning between saying structural breakout over the level here is bullish, and that is absolutely what's most important, and I should be getting long. Intraday trend definition, totally screwing me up, right? Slow trends, I've said it in the course, I say it all the time. Slow trends are often where I lose money by design. We can't win them all. I made a bunch of mistakes today, but constant shift in intraday condition means losers for me. Okay, so that was occurring, but the mistake for me was way too many trades in that sequence, way too many. B, I was flip-flopping between structural breakout, most important, into this combination of one, order flow's weak, order flow is bearish, and the intraday uptrend is continually unable to hold. So that combination of a bullish narrative combined with bearish, shorter term things, and me getting anticipatory about the ultimate breakdown back below 2504 is exactly what happened to me today. So, I think it's, if that can happen to me, that can happen to a lot of students. So I think it's important to address and be forthright about that kind of stuff. Number one, slow trends are going to get us from time to time if we don't identify that type condition very early. And a lot of times it's difficult to do because that's not a standard thing that we operate within. It's either rotational or it's trending, right? So slow trend is very difficult, oftentimes losing. I think the most important thing, if I could give someone advice not to do what I did, it would be to stick with the narrative, right? I think that narrative was bullish. I don't think that narrative was bullish in that area. We're holding above that level, and either you get in from a decent trade location, and you hold it and you identify slow trend would be ideal, or you get stopped out a couple times and you realize the dissonance between the short term and the narrative, and you stand aside and you quit banging your head against the wall like I did today. I continued to flip flop and just kind of went on tilt, to be honest. Totally just, set aside all best practices and just kind of got frustrated and said, I'm going to keep putting the risk on. I'm going to keep trying to nail this one way or another. I don't care if it ultimately uptrends or ultimately fails. I'm going to continue to, whenever it looks like there's momentum, I'm going to keep putting a trade on and scratching and reversing and all that crap. And I just lost so much money today. So don't do that. Okay. Let's dive into the questions. Please use the Q&A box and feel free to let me know what's on your mind and what you'd like to discuss. And first come, first serve. So first up, James, is there a good way to involve yourself into a failed IPB when they don't offer rhythm-based pullbacks? Example, push into DVA again and hold a few bars, then go. Let me try and comprehend this. I got you. I'm with you. Absolutely. If it's a narrative-based thing and you're stalking failure, then you can take more breakout-based entries, right? If it's kind of, one, if it's putting in kind of I'll draw this out. Let's see. If it's putting in something of like a choppy sequence, you don't have to try and time the micro rhythm of these. You can trade the little breakdown, and that can be the point of the intraday condition shift. That's fine. It doesn't have to be like the example you're talking about, or where it's going to break down and then maybe just barely do something and it's just gone, right? So if it's a really, really bearish contextual area and you've got a good reason to do that, I'm fine with almost more of a breakout style type entry. It shouldn't be like standard practice for you to do that, I don't think, but it is acceptable at times where you've got a really good narrative and you want to kind of be aggressive, because it would be more aggressive. Nika, one of our newest junior traders, which periods besides the last 3 months would you recommend to test on market replay to make sure the system can handle different market conditions? I mean, that should be pretty straightforward, you know. Look at I mean, you could do it visually, you could do it quantitatively. Look at your range of bars over various periods, and that's going to give you a sense of volatility, right? Whether it's daily bars, whether it's 30-minute bars, either way, you're going to get some time frame sense of volatility, and go test your system in high volatility periods, low volatility periods. That's, it's a very smart question. But I think the answer is pretty simple from my point of view. Very, very important to understand, at least, maybe when to turn on system A and turn off system B and vice versa, right? Context is king. So volatility is a component of context. Kyle says, hey, Merritt, do you think you can go through your process of what you're seeing, indicator, time and sales, price action, or simple a stop loss that will make you close a winning position out? Simply, what are you seeing that's telling you price is not merely pulling back a little bit, it's reversing? Kyle asking for the age-old question of ultimately kind of what trading comes down to for most traders, and that is a difference between short-term indication that momentum or order flow is shifting with long-term implication as to what that means. Is this a normal pullback of ebb and flow, and perhaps the trend will persist? Or is this the bottom and this is a reversal, right? At the end of the day, most of the times we never know. We can begin to put together various best practices and things like that, which ultimately is, I guess, what you're asking me. But I just want to start by saying, at the end of the day, we never freaking know, ever. For example, let me give you a conversation that we were just having in the student-only room. We were looking at the S&P, and I had a student who said, stalking short right here. Perfect spot to get short, right? And I called him out and said, you don't have a good narrative for that trade. Okay. So I was thinking that factors, contextual factors, one main reason being this is a general bullish area and this is the stacked reference below it. And I saw an order flow shift as buyers came in there. Contextual shift. So for me, likely destination has been hit. Risk reward is no longer asymmetric to the downside. But the student came in and said, this is an intraday short opportunity, the way we use some intraday tools and whatnot. And he was perfectly spot on there. It was a perfect setup, if you will. And I came in and said, context doesn't support this particular setup. Now, we're all looking at the chart here. It worked, right? You short 75 and we're now at 57. So that's a good trade any day of the week. But the student fully understood this. I said it, but he didn't know. He didn't think this either, but I just said it for general teaching for the room. I said, don't confuse outcome with great process-driven NADRO methodology trading, consistent application of that. Just because this quote unquote trade worked doesn't mean that it was one good trade, right? Very, very important. That's one of the holy grails of trading, is being able to separate outcome from true edge, true process driven, consistent application of real market generated information variables, and using all your tools properly. So for me, that would be a great place to exit, Kyle. And the question is what I'm seeing. I'm looking at cumulative delta. At various times, I'm using a footprint chart. Right now, I'm not using a footprint chart. So I'm looking at volume and how it's trading, and how buyers or sellers are lifting offers or hitting bids. I'm looking at general price action relative to kind of VWAP and where we're trading in that regard. I'm looking at the big picture risk reward and where are we within the story that's unfolding. Once we broke down this level up here today, to me, there was nothing else. Like, there's a million bits of information we can analyze from point A here to point B where we are down here. But there was only one piece of contextual information, and that was, as long as this breakout attempt failed from right here, the market is trying to get to this general area. And so for me, once the market does those things, to me, there's by definition less opportunity on the table. The asymmetric risk reward that was there from higher is gone. And so I'm going to look at order flow. I'm going to look at price action. And if I see something that looks bullish as we enter and get closer and closer and closer and into the level of the destination, as we call it, that's going to be to close a position out. I typically don't place a lot of limit orders. I typically don't trail, stops and that type of stuff. I'm more discretionary in where are we within the read of the narrative and the story that's unfolding. And now what are some of those shorter term tools telling me in those situations? Shazeb, is there a link to the old Excel Slack Room Futures Friday videos, or is there a need for a username password? I don't know what you mean by Excel, but all of the recordings of Futures Friday, as we used to call them, and now we call them, wait a second. No, we used to call it Trading Conversations back when me and another guy was running it. And then I just wanted to make it Futures only. And I changed the name to Futures Friday. But anyways, all of those recordings are available in the Futures member area. And I think you have had to have bought a course from us or something, or maybe it's you have to be you have to be a member of the chat room. If you have chat access, which all of you should if you're on this webinar, then you have access to those recordings. Toby, I know you're starting to experiment with some market breadth tools. Can you share what's interesting about that path to you? Any early observations from your experimentation? Any thoughts about where one might go to set up to get up to speed on these tools? Yeah. So I have to be careful what I share here, because like I hope all my students are with me, I'm not going to be happy with someone who takes everything about what I teach them as a student, Futures Foundation student, or private or group mentee, and then just goes and starts a website and starts teaching what my stuff is, right? Like I would not appreciate that, and some people are flirting with danger there, I think. But anyways, I had one of my best friends at SMB share with me a lot about what he looks at, and not just looks at, but has like quantitative models actually that are back tested and profitable and run based off of internals. So I can tell you, um, I'm looking at the tick, and I think this is what led to this is simply, I guess what's interesting about the path to me, we can begin there. I've been trading a lot of S&P, right? Used to, I'm either really, really focused on crude, occasionally put on a good trade in ES if the narrative is there. Um, and then I think, as many of you know, I've had a bit of an evolution in my trading where the volatility being here and being crazy, I haven't been doing this. I've been kind of back to just crude and S&P. But once volatility dries back up, um, which it's starting to do, but I hope it's not permanently dried up, um, I will go back to monitoring that, dozen or so markets and looking for the best narratives and then, trading those markets. But right now, where I'm trading, quite frankly, mostly S&P, some crude oil. There's been plenty of days over the past several weeks where I haven't touched crude, and I've traded, 50 trades in the S&P. So for me, it's like, wow, well, I never traded enough S&P to justify going deep into internals. But now that it's like the main focus of my day-to-day trading, it's like, why not have more insight into that market? So that's what's interesting about it. That's how it came about. And Marcus happened to have posted something in the room the other day about it, and I chimed in because it was something I'd been thinking about and was interested in, and said, "Hey, I'll go down this path as well. Let's dive in." I'm as much of a rookie as anybody else with that. So let's check it out. So I've been studying it. Um, you know, with the tick, which is where our conversation started with the students. I think you can use it in a couple different ways. One is whether or not you're looking at the cumulative tick or not. Is simply, are most of the ticks, let's say a lot of people are looking at like a 1 minute tick. Are most of the ticks holding above zero? Are most of the ticks holding below zero? Gives you a nice little read on kind of the medium term, if you will, of the overall strengths or weakness of U.S. equities, right? I think if I look at the tick today, I would see, this is what my eyes see. I see, like, if this is zero, early on, it's a little above and below, right? So that's kind of neutral. And then things cracked, and I'll talk about this later, but we start to see something like this, right? It's like it would poke above zero, but then really snap back. So that's a bearish type signal, and we're seeing most stocks ticking down. And then, by the way, as soon as the market hit this important structural reference, we saw a little shift in the tick. We saw those bottoms start to kind of get lower. And in fact, we saw the highest tick readings we've seen all day. But then I would argue that the bulls didn't hold on, and I, in real time, was talking with my SMB guy about how things went neutral again, right? Like we were at the beginning. So that's one way of kind of using that, is just simply relative to zero. What is that general? I'm not talking like, hey, the tick just went above zero, that's bullish, we should get long. Hey, the tick just went below zero. I know you don't think that, but just to be very clear here, it's more of like a general grouping over the past 5-10 minutes, like where is it generally holding, kind of like I'm drawing up here. So that's something that's interesting. And the other thing, which is more short term, is stuff like this, right? So are you seeing an extreme reading? I think it's pretty common knowledge. Everybody looks at like extreme readings of like, a 1 minute tick of like 800 to 1,000, right? That's a big tick, and a lot of times, and look, I think you use all the tools that we continue to use here, especially like rhythm and different kind of shorter term tools. And you can use the tick in seeing some extremes, right? So if you're looking to get short, it might be a great idea if you're getting a pullback and all of a sudden you do get an extreme tick, and you begin to see a little bit of momentum shift or whatever. That's probably going to be a good short-term trade location. You're probably at least going to get some kind of rotation away from there, whether or not your idea as a whole works out or not. And same could be said for maybe a scale out or something, right? This trade does work and it starts to really work, and all of a sudden you get a really nice kind of extreme tick. Might be a nice place for that scale out into strength, right? So I think those are the really two big ways of using it. But I'm just 48 hours into exploring this myself. There's other breadth things which I say breadth. Someone said it's market internals. I don't know what to call it. I think those are the same things, but I have no idea. Advanced decline is another thing. So I don't know. That's kind of where I'm at with things, and it'll be interesting for me. One of the things I was telling my guy at SMB is that I'm going to be really interested in comparing what I see on Delta versus what I see on some of these other internals, and where there's differences and where there's similarities, and what ultimately with studying history and what the implications, if any, are of between those two things. So that's an area I'm going to be headed into. So yeah, Shazeb, I don't know right now the significance of differences between Delta and tick. Delta is obviously going to be a much more let's call it personal metric to the market that you're trading and what the participants that are putting money on the line are doing. Whereas tick is more degrees of separation. We're talking about NYSE tick of all, 3,000 stocks or whatever it is. That's not, the actual here and now of who's buying and who's selling the S&P 500 futures, right? And I know a lot of times these things are going to be like related, obviously. If stocks are crashing, the S&P is crashing, you know what I mean? But I think that's an important observation, is that one is very intimate, very first, primarily connected to the market, and one is, tertiary and much more broad in its read. And so I think they should be categorized as such. Can you talk about your MAE analysis? Sure. Real quick, just so everyone knows, let's say you get long right here, and let's say that, goes in your favor, goes against you, goes in your favor, and, you exit the trade. So this is your entry price. Just setting up the definition here for everybody just to make sure. The distance between, the MAE is the distance between your entry price and the most the price ever went against you, right? That is your maximum adverse against you, right? Excursion that price went against you. So when, I set up an XY scatter plot or whatever of, I can't even think of how to do this right now. We'll say y-axis will be P&L, and the x-axis will be MAE. So it's Friday, my brain is not working. Here was a winner I had, and I guess everything's going to be over here because it's adverse excursion. Over here. So let's say I made $500 on a trade, and let's say it drew down, minus 500 at some point, right? So the plot would be here. There's different ways to plot this, right? And I know you're talking about some of the stuff I've shared on Twitter, which is correct. Yeah, X in the stuff that I've shared on Twitter, X is just what's called the trade index, which is trade number 1, trade number 2, trade number 3, and then the y-axis is showing like how much heat I took, and then the color and size of the bubble is about P&L, how big, how small, winner or loser. Anyways, this would be an acceptable. In fact, some of the different ways you slice and dice this data is very nice. So the way I posted it on Twitter is not always the best way to view it. So anyways, it's really good to get a sense of, for, all these winning trades, for example, let's say we're only going to focus on winners right now, right? And so, we could look at the plot of, again, P&L here, and let's say max adverse excursion, almost like inverse or something. So, it's really good. The very best trades are going to be very low adverse excursion and very high P&L, right? So this is a great trade. Well, if you barely made chump change and you took, $10,000 of heat on the trade over here, that's as bad as it gets, right? So that's the gist of it, right? So you want to take a look at your trades, and, typically MAE is going to be helpful for determining, like you saw in my trades where I had a bunch of winners, which took almost no heat, and some winners that took some heat. This would be more heat. And then I had like this group of losers, right? This is like 0 P&L. I had loser, 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 right? And essentially it's saying, well, and I drew that big line on the chart and I said, look, I don't have any of my best winners that drew down more than 5 points of ES heat. So I don't need to be taking more heat than that, because for current conditions, what it's telling me is those trades are not coming back. So that's the general gist of it. And that's for MAE, you ultimately learn, like, one, you get to see how good is your timing. That's one thing the data is going to tell you, right? Are you constantly having to take $1,000 of heat to make $1,000? That's not very good risk adjusted trading. So, we're talking, quite frankly, it's pretty phenomenal that I'm not, like needing more than 5 points during one of the most volatile S&P trading periods in history, right? That's pretty dadgum good timing that is telling me that I'm doing. We're talking 50-point winners, 80-point winners, 40-point winners, and you never need more than 5 ticks of heat. That's telling you your timing is good. That's really, really good information. So it's not always going to be good information, but I'm saying from a neutral perspective, what is it telling you about your timing? And that's a great thing to see. If I see traders that, another thing you look for is like big outliers, right? Like, do you have a huge heat that you took? Well, that means that you probably slipped up. You probably broke some rules, right? Are you doing that a lot? That's a real problem. You're going to get burned. So that's another thing you can look for. And then the other thing, which I was kind of showing, was it's almost like a stop analysis, right? It's almost like a back test, except it's your discretionary trading, and you're back testing where's the ideal stop placement for this methodology. And that's kind of what I was pointing out on Twitter. MAE is a great tool. All right, guys, great questions as usual. Happy Friday. Enjoy the weekend. I'm going to go get out in the woods and do some turkey hunting. Hopefully I'll get one. I've never gotten one. So year 2 here, chasing those birds. Yeah, great job, especially in the student room. Great sharing. Great job with the mentee groups. Keep it up, everybody. We'll see y'all next week.